So I invested £10 every single day the stock market was open since the middle of October, and here are my results. So I've been using the investment broker Trading212 to invest £10 every single day the stock market has been open. And if you would like to sign up to Trading212 and receive a free fractional share worth up to £100, all you have to do is to follow the link in the description box down below. Alternatively, if you've signed up to Trading212 and haven't received a free fractional share, all you have to do is click the 3 horizontal line menu over here, scroll all the way down until you see the use promo code section. And in this menu, use my code JUBAIR and you should get a free fractional share. Now, as you can see, this is my Trading212 Invest account, and I have a pie here that says S&P 500 every day. Now, if I go into my holdings, you can see that I have been investing £10 every single day into this fund here, the iShares Core S&P 500. I specifically did not choose Vanguard just to show you guys that, making your choice between which S&P 500 funds is particular to you. And realistically, I personally don't see huge differences between the lot. Now, this whole experiment started in the middle of October when I realized that the S&P 500 was at historical highs. Now, investing at all-time highs can make a lot of people very nervous as they don't know how much it could drop by or if it's going to keep on giving. So as we can see from a 3-month overview, indeed, that was pretty much the highs of the S&P 500. And since then, we really haven't seen much difference in the value of the S&P 500. Now, I am filming this right at the end of December 2024. This will be out in 2025. So if any huge market changes happen in the last 2 days of the stock market, well, you know how the stock market works. Now, if I go into the overview of the pie, you can see I've been investing into this fund £10 every day. I actually have recently, switched on auto invest, and I've made a video on how to automatically invest into the S&P 500 over here if you really want to check that out. But with auto invest, instead of manually going in every day and investing £10, it does it automatically as long as there is enough uninvested cash or free funds in my Trading212 portfolio. As you can also see, I have £1,076 in cash right now. That will give me around 100 days of, stock market investments to keep on going. Obviously, if I wanted to, I can top that up further. But currently I'm getting 4.9% as an annual equivalent rate. Most of this is put into qualifying money market funds. So do bear that in mind if you are investing your uninvested cash in the Trading212 Invest account or the stocks ISA. As you know, qualifying money market funds are classed as investments and your capital is at risk. But anyway, that is a daily interest payment of 14 pence on top of everything I'm getting. So auto invest makes it really easy for me to continue this even if I forget. The other day I completely forgot to do it manually, but auto invest saved me. But anyway, you can see my net deposits have been £570. If you do the math, that's 57 days of investing into the S&P 500. The first £10 purchase was on the 14th of October, and you can see every day 14, 15, 16, 17, 18. And of course, the 19th was a Saturday, the 20th was a Sunday. So every single day, £10. On the 14th of October, I purchased this fund for 4,471 pence. Today's value, of course, is considerably higher. So you can see since the 14th of October, things have been looking a bit better. But since November, the stock market or the S&P 500 has barely shifted. So currently my investments of £10 every day is worth £581.68. So if we do the math here, that is a rate of return of around 4.2%. And since investing, that is a gain unrealized of £11.68, basically giving me over 1 day worth of deposits for free. So according to my calculations, since the 15th of October, the S&P 500, well, the iShares one here, has gone up by 5.3%. Our return has been 4.2% by investing £10 every single day. This means that on the 14th of October, if I had lump sum invested £570 instead of spreading it out over 57 days, then I would have around £600 and 21 pence. Now in this time period, I didn't receive any dividends. And if I were to receive dividends on this pie here, it will be less than if I were to invest it all at once, at the ex-dividend date, I would have fewer shares on this one as I'm spreading it out over 57 days. So in this time period, lump sum investing has beaten out, dollar cost averaging. Personally, I would always prefer to lump sum invest over dollar cost averaging. As you know, we invest into the stock market with the assumption that the stock market overall will go up as a function of time. Of course, past performance is no indication for actual future growth, but we do go in with that hope. So make sure to check out some of my other videos and I'll see you in the next video.